if they turn in the information that you asked for in that conditional approval, there is still a chance that they will not get approved, right?
Mm-hmm.
Okay. And then they don't get to talk to y'all. All they get to talk to is the realtor and the loan officer.
Right.
It's like, we take all y'all heat. So
right, I know.
I'm just like, is this process subjective? Meaning, is it the person that's actually looking at the file that really determines whether they're going to approve the loan based off of you even turning in all the conditions that they asked for?
Okay, well, let me say this because something. As an underwriter, I don't get to say if I'm having a bad day. That doesn't determine whether or not I'm approved this loan. It doesn't have anything to do with my feelings, my personal, none of that stuff. As an underwriter, I have to go by guidelines, which in every loan that we do, we have a group of guidelines that we have to match that say, okay, this person has never been late on any of their payments or any of their credit cards, any of their anything. Everybody fits into a criteria. It's not just how I feel that day, whether or not I don't like Kim today, so I'm not going to approve it. It doesn't work like that. It fits a criteria because, again, we have to go by the guidelines. The guidelines tell us what we can and cannot approve. If a person, say you have, unfortunately, some people run into it where, and I try to remind people, even when I was a processor, people want to go purchase a home or refinance a house, but, I'm going to go buy a car at the same time. No, you can't do that type of stuff. You have to wait for that transaction to go through because guess what? I might have seen the file already, but you went out and decided you wanted to either go furniture shopping, car shopping, whatever. But now all of a sudden it's another debt. So now I have to count that debt against you. But what if you don't make enough income in order to carry that and the house now? Most people don't think about that type of thing. Okay, I can go shopping. It's not going to affect it. It does affect it. Because again, we have to see everything on paper and everything fits into a criteria of what we can and cannot approve. So again, it's not like you can turn some things in, but what if Kim has something that pops up and we never addressed it from the beginning because you never thought it needed to be addressed. But now all of a sudden I see it. I can't make it just go away. I have to now address it as an underwriter. Okay, Kim did this or Kim did whatever. But if we pretty much know everything in the beginning, or even if you were to say, in the midst of, I was already in the process of going to get a car. That might slide a little bit better than it's just being thrown on me in the middle of me reviewing the file. Or unfortunately, I've had it where borrowers have lost their jobs in the middle of the process. If you lose a job, where are you going to come up with the income in order to maintain taking care of your, the home and all your other debts? So these are some of the things that people have to think about as far as when it comes to underwriters, because we unfortunately have to go by certain guidelines that the lenders give us, whether it's the government for FHA, VA, USDA, or just a regular conventional loan. Everything has a guideline for it that we have to match in order to approve the loan. So it's not, I don't feel like dealing with Kim today, so I'm not going to approve it. It doesn't work like that. Okay. So some people think it does, and I'm like, it never has. Yeah, we all have bad days, but as an underwriter, I can't let my personal emotions and feelings decide on how I choose, whether or not I choose to approve a loan.
Okay. All right. So that leads me to my next question. So why can't we talk to y'all? Why can't we talk to the underwriter? Like, they were like, nope. Can't talk to him. Right. I know y'all busy. I know y'all busy, but why we can't talk to y'all? I just want that. I'm asking for a friend. I'm just asking for a friend.
So most of the time, and I'll say this because before I was an underwriter, I was a processor. I was an underwriter. I was a loan officer's assistant. So unfortunately, sometimes I feel, and this is from what I've seen and being in the industry for 22 years, the expectations are not set up correct. And why I say that is the loan officer and the processor are supposed to set up your expectations of how your experience is supposed to be when you're going through getting your financial backing.
Okay.
So unfortunately, I feel like, and from what I've seen, I don't feel like borrowers are given the true expectations, if that makes sense.
Okay.
Because I tell when I used to process, I told my borrowers, look, even though I have everything I need right now, once the file comes back to me, I might have more conditions. I might have more requests from the underwriter because they're telling me certain things that have to be done. Mm-hmm. As the underwriter, what they don't want with us is for us to come in and you try to sway me differently. So that's taking away from any type of emotional, anything, decision making, because that's why they never really want the underwriters to talk to borrowers. I have been underwriting. I have never spoken to a borrower. I might speak to the loan officer. I might even speak to the processor, but I'll never speak to the borrower because, again, they don't want that emotional, because you could have a sob story that you're trying to convince me, well, why won't you approve my loan because I've got X, Y, and Z going on. This is about to happen to me. I can't approve it because of those circumstances. Again, I have to go by what the guidelines are telling me, not off of personal emotion. Does that make sense?
Okay, that makes sense. All right. That makes sense. Personal. Okay, there's nothing personal. Okay. Sometimes I feel like it is, but okay.
Right, I know.
I'll get over it. Okay, so my next question is, what, and I think you touched on a little bit, what are some things that you have seen that have killed a loan?
Wow.
I can name some, but that I've seen, but I want to know what you've seen.
Okay, and I want to see. They might be some of the same ones that I've seen, so I'm gonna let you go first, and then I'll add on to what you.
Okay. Not being able to so one thing I saw, not being able to truly verify where some funds came from.
Yes.
Right. Whether they use like Cash App or, some other electronic form to receive their payments if they got a business and they self-employed, just not being able to verify Cash App funds.
Yes.
I've seen that for a reason. I've seen people elect to have elective surgery while they're buying a house and not being able to show consistent income because they were off for 6 to 8 weeks while they was purchasing, but it was an elective surgery, right? So they didn't have to do it.
They could have did it after the process.
Could have done it after closing.
Oh, wow. Okay, yeah. I could definitely say that.
Buying a vehicle.
Yes.
While you trying to buy a house.
Yes. Definitely that, between that and going furniture shopping.
Refrigerator.
Everything that you could have bought when you were after the process. You didn't have to do it right then and there, but you chose to do it in the middle of the process. I would say a loss of a job.
Okay.
Unfortunately, in the weather that we're in right now, most people they don't know if they're going to get laid off, let alone even have a regular job. Right. Because you might come in today and tomorrow you might not have a job. Right. I would also say trying to hide funds. I've seen that before.
Talk about that.
So when I say trying to hide funds, so say for instance, I had a borrower before On paper, they look like they had enough money to purchase for the down payment. When it actually came back, they did not have enough money. So they, again, I might say, okay, Kim has $4,000, $5,000 she's going to put down as her deposit. But when it comes back and we have to re-verify it from the bank, the money's not even there.
Oh.
Yeah, so if it's not verifiable, like you were saying before, I've seen that before where a person, oh yeah, I got all this money. And then the other thing is, say for instance, like one of the things you were saying, you can't verify the earnest money when it comes to purchasing a home. You say you put X, Y, and Z down, but we don't have a check to even prove it clear. So is the realtor holding it, or does this actual check really exist? Or as they say, is it an illusion?
Or did it bounce?
Right. And we didn't know anything about that. So some of those...
Because it takes 10 days and then da-da-da-da-da-da.
Right.
Exactly.
So there's certain things that people have to think about. And again, I think certain expectations need to be set from the beginning. Because when I was a processor, I used to tell people, I'm pretty much going to need to know your whole life on paper. Except for your firstborn's blood type. That's it. I don't need the firstborn's blood type, but I have to be able to connect all of the dots on any and everything you tell me. But if I can't, don't tell me something and I can't verify it. And that's what most people don't understand. Everything is going to get verified from A to Z. Because again, as an underwriter, I have to make sure that we're insured in order to cover this loan. Because as a lender, we have to be able to carry the note, because if something goes sideways, what if we can't sell the loan to the lender or to the government? So some people don't even think about that, because unfortunately, I've also been a post-closing processor too, where the loan is closed and then we audit the file and there's documentation missing because, the processor or the underwriter forgot to request it. And we have to go back. Yes. And we have to go back and ask the borrowers to resubmit this information to us. Well, it's already closed. Do you think we're a top priority now because it's already closed? No.
Right.
But I have to be able to still have access to the borrower and say, I still need this information in order, even though they signed off on the loan to close, I still have to be able to turn around and again, either sell the loan or we have to sit on it.
Gotcha.
So yeah, those are some of the things.
So is the re-verification of bank statements or job like a round robin thing where they just kind of every 5 loans pick somebody, or is that across the board?
That is pretty much across the board when it comes to like verification of employment. Because unfortunately, and I can say it as a processor, I've had it the day before we're supposed to close, we call and they're no longer employed. That can kill everything.
So, what should borrowers keep in mind when they're about to submit their documentation for a loan? Like, what do you see as far as like that initial, even from your loan processor experience, that initial kind of submission? Are you able to submit a file without all the information? Or kind of...
Sometimes you're not. The basics that you have to have in order to turn a file in is a complete 1003.
Okay.
And no information missing. Addresses for your employers, all that information is in there. If you have current rental properties, all that, the values of those properties. You might not have the homeowner's information or the tax bills right away, but all that stuff can be pulled as well. I would say a month's worth of not bank statements, of pay stubs. You have to have at least 2 weeks. If you get paid weekly, at least 4 pay stubs. Then you at least have to have the last 2 years of W-2s.
Okay.
Then you also have to have at least 60 days of bank statements.
Okay.
with no gap.
And does that bank statement need to have the proof of funds to be able to close the loan at that point, or they can show it later on?
They can actually, sometimes they'll let you show it later on,
Mm-hmm.
especially say, for instance, like what we were talking about before, if you were given a gift and the money hasn't cleared yet, we can always go back and show that that money's in there. But if at least we have an idea, or we know for an instance it's going to be coming, that's one thing I can condition you on later on. Okay, proof that these funds have cleared.
Okay.
So stuff like that, yes, you can definitely check on. You don't have to have all that, but at least, okay, if you know you're being receiving a gift, at least already have the gift letter completed. Because then I'll know mentally, okay, it might not have cleared yet, but these funds are supposed to be available soon.
Mm-hmm.
And then I would definitely say you're going to have a copy of your ID. They mostly do that. And then your, I'm trying to think, the complete copy of a purchase agreement.
Mm-hmm.
And a copy of, if you currently own a home, a copy of your homeowner's insurance. If you can have those 6 to 7 things, you'll be good.
Okay.
But like, say for instance, if you know, some things people forget are divorce decrees, child support orders, because that can make or break a deal. Because what if you're receiving child support? That's considered more money coming in. Mm-hmm. So you have to have proof of that. Small, and those are considered small things as far as like a divorce decree or a child support order, because not everybody's going to have those, and every situation is different as well. Sometimes you might have it where, say for instance, you work for a company but you're a third-party contractor, so you don't directly work for that company, but you get paid. You get paid through one company, but you work for another company. We've seen that as well too. So if your employer or your HR or your supervisor writes a letter stating, okay, he's contracted through us through X, Y, and Z, but we pay him, stuff like that. But you never want to give an underwriter too much than what they need, because then you're opening the doors for something you don't want.
Okay, repeat that.
I said you never want to over disclose your packages or your income or anything else, because you might be giving the underwriter more information than what they need, which can cause you more problems.
Amen.
I'm going to church.
Church.
So, yeah.
All right. So is there anything that else that you think that buyers should know that we haven't touched on about how to prepare for the mysterious underwriting process?
No, I feel like most people need to have an open mind. You can't just be, oh, it's going to go this way. Because I'm sorry, as human beings, we can't control a lot of things, and things change all the time. So I feel like you have to be open-minded to be, okay, what if things change? And what if they're asking for additional information? Most people get angry, which is the hardest part of being a processor, because borrowers, well, you didn't tell me that I was going to have X, Y, and Z. And that's where I think the expectations come in of, you might get requested for extra information, and not be, argumentative about it, defensive about it. It's nothing personal, but we have to match these guidelines in order to approve your loan.
Okay, let me stop you right there. Because I think sometimes, true enough, people honestly get frustrated with the process, right? But I think sometimes buyers don't say everything.
True.
Because they know there's an issue, but they're going to wait for you to find it. And if you don't find it,
that's different. But if we do find it, you can't get mad at us for that. And sometimes I feel like if there's certain things that could be a problem, you might want to. Exactly. Because what if if you hide something and I find it, you don't think I'm gonna ask about it?
Yeah.
So now you've opened another can of worms when you could have we could have addressed it from the beginning and I wouldn't start digging.
Right. Or you could have addressed it in the beginning and the earnest money is not in jeopardy. Right.
Yes.
Because if we get into the finance contingency and now, things that you knew that we don't know, but we find out now, and we out of these different contingencies, then your earnest money is in jeopardy.
Yes.
So,
and because you didn't tell me those certain things that could affect the whole deal.
Yeah. So it's almost like a fine line. You can't state too much, but you should state what is, fairly findable.
Yes. Yes, I agree with that. Very much so. Yes.
Yeah.
So I would definitely say that, because you would rather I know up front instead of me finding it.
Yeah.
Because it could be, unfortunately, as an underwriter, I have the right to scrutinize it a lot more than what it could have been. Mm-hmm. Especially if you would have just told me and I would have, okay, yeah, I know it's there. I'm not going to scrutinize it as much as if I find it, I'm going to scrutinize it.
Mm-hmm. All right, I'm not going to go down this hole, because I could go down there some more. I could go down that hole a little
Maybe
bit more.
Another time we'll touch that one.
Yeah. On that note, we're going to say goodbye. Goodbye.
Okay, cool.
Thank you, Amber, for hopping on with
us.
Not
a problem.
I think the conversation was very valuable to potential buyers to kind of understand the process and get some of the mystery taken out. But even though it's still a mystery, they should have a better understanding after watching this video. So I appreciate your time.
Not a problem. Thank you.
2023, I'll be talking to lenders, some of my vendor partners, just to give you a better idea of how the process works. So buying a home, selling a home. I think education is very important at this time to keep buyers and sellers informed about what's happening in the market. So look out for those videos. Thanks.